Whether you are considering a new job opportunity or have recently lost your job in Canada, it's important to understand the income tax implications that may arise from such situations. Job changes and unemployment can significantly impact your financial situation, including your tax obligations to the Canada Revenue Agency, CRA. In this article, we will discuss key aspects to consider when changing jobs or dealing with job loss in Canada. If you have been laid off or terminated from your job, you may receive severance pay from your employer. This pay is a one-time, taxable payment and is normally calculated based on your years of service and your last earned salary. It is important to note that severance pay is considered as employment income and is therefore subject to income tax. You will receive a T4A slip from your employer, which will indicate the amount of severance pay you have received. Ensure that you report this amount while filing your income tax return. Depending on other factors such as your total income for the year, the tax bracket you fall into, and any deductions or credits you may be eligible for, the actual amount of tax payable on your severance pay could vary. If you're actively looking for a new job, there are certain job hunting expenses that are tax deductible. These deductions can help reduce your overall tax liability. Some of the qualifying job hunting expenses include employment agency fees, cost of preparing and printing resumes and cover letters, travel expenses incurred to attend job interviews. It's crucial to keep a record of all your job hunting related expenses so that you can claim these deductions when filing your tax return. It is also essential to note that job hunting expenses are not deductible if you're seeking your first job or if there has been a significant break between your last job and your job search. If you have lost your job and are receiving employment insurance, benefits, it's important to be aware that these are taxable. You will receive a T4E slip from Employment and Social Development Canada, which will indicate the total benefits paid to you during the year. It is essential to report these amounts on your income tax return to avoid potential penalties. Moreover, you may elect to have income tax withheld from your payments, or you may find that you owe additional tax when filing your return. This occurs since the amount withheld at source from benefits may not be enough to cover your overall tax liability for the year. Having a clear understanding of your tax situation is critical when navigating unemployment benefits. If your new job offer involves employee stock options, it is essential to understand the tax implications of such compensation. The CRA taxes employee stock options as employment income, with the taxable benefits coming into play when you exercise the given options. Taxes applied at the time of exercise will depend on the difference between the exercise price of the stock option and the fair market value of the underlying stock on the exercise date. Additionally, there are tax advantages available under certain conditions, including the deferral of taxation until shares are sold and the possibility of claiming a deduction of up to 50% of the taxable benefit. It is crucial to consult a tax professional in these cases to determine your specific tax situation and to maximize potential tax benefits. Navigating the income tax implications of a job change or loss in Canada can be complex. It is always helpful to seek professional advice to ensure that you are managing your tax obligations efficiently and minimizing any potential penalties. By understanding the tax consequences of severance pay, job hunting expenses, unemployment benefits, and employee stock options, you can be better prepared for any changes in your employment situation.